What's going on, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap video. January 24th, 2022. It is day 6 post-surgery. Definitely feeling a little bit better. I'd say I'm probably like 65% there. A little bit easier to breathe. Anyway, all right, let's talk about these markets. Before we jump into that, quick first disclaimer: nothing in the video should be construed as investment advice or recommendations. Please follow your own trading plan, your own risk parameters. All right, let's dive in here. So this was such an insane trading day. This basically felt like it was 2 trading days in a row. Box scores. If you were just looking at this end of day, you'd be like, oh, nice day in the market. We had the S&P 500 up 0.42%. The ARK Innovation ETF was up 2.82%. This thing at one point today was down over 8%. S&P 500 at one point was down close to 4%. It was insane. So this morning, market was pretty weak. We're coming off of OPEX. The momentum is to the downside. We start to get these headlines like, oh, China might be about to invade Taiwan. And then simultaneously, it's like, oh, Russia might be about to go into Ukraine. So adding to all of the uncertainty and all of the, market fluctuations, it's like, okay, now we're about to go to war. So, a lot of craziness in the market this morning. Volatility ended up closing higher on all of these indices. At one point, the VIX was up a good 20% on the day. The VIX got up to a 38 handle. Pretty crazy stuff. And then, basically 2 days. The first part of the day was like a plunge. And the second part of the day was a nice recovery. Breadth ended up finishing positive in all of these indices, except for the Dow Jones with some negative breadth. But I must say, it really felt like it was, a crash that was occurring. So pretty wild stuff. And I think it just goes to show, for everyone in the community, we never know when the market's going to bottom out or when the dip buyers are going to come in, anything like that. It just takes some patience. Then eventually it happens. But it's pretty much out of our control. FinViz heat map. You can see here, again, if you look at this, it's like, hey, not a bad heat map. We had some of these FANG stocks turn green intraday. Home Depot had a nice day, right? But intraday, Tesla was down almost 10%. Microsoft was down 8%. All of these were down so big. Let's actually just pull up some of these just so you can see what I'm talking about. So for instance, Microsoft. Look at this. Look at that huge candle. It was down here at 276. Closed the day at 296. That's a 20-point move. Tesla ended up finishing red, but look at this. It was down at 850. So just absolutely wild moves to both sides. I'm sure there's people that are like, yes, I killed it going short today. And there's other people that killed it going long. So a little bit of everything today. Let's take a look at our sectors, and we'll take a look at our style factors as well. All right, let's check it out. So energy was up. That's in our top momentum slot. These gold miners are in the number 2 slot. And I actually added a position in GLD today, so I'll talk about that in a moment. But big bounce in retail, up 6%. And then these ARK Innovation ETFs all had nice bounces for today. Home builders were also up 3.23%. Even software had a nice little bounce. So definitely getting some relief. Style factor, same deal here. These were all blood red at one point during the day, and they all finished out, or not all, but most of them finished out green. High beta was the best performer, up 1.13%. Actually, the cyclicals, these are the small cap value, up 1.79%. So pretty risk on that we have the cyclicals and high beta rallying. All right, let's take a look at the headline indices. Oh my gosh. So my trend model is still at a -3. So while today was a pleasant surprise, we're certainly not out of the woods yet. Hey, maybe this was a nice little local bottom. Certainly looks like it could be, because we had every reason to slip into the abyss, and we did not. So nice, basically a hammer candle here, looking good. But the trend of the market is still down. We couldn't get above the 200-day moving average. So this is still a pretty precarious picture. But funny enough, we went over this setup in our weekend watch list for members. We went past this VPOC right here, and we ended up cascading below. But the VPOC did end up working as sort of like a bottoming point for the market, at least a local bottom. All right, let's check out our Nasdaq. Nasdaq also put in a nice hammer candle, but we're still below this monthly value area. Still extended to the downside. Look at how much volume went off in the Nasdaq. Pretty remarkable. Apparently this was like the highest volume day since like 2011 or something. So there's something really weird going on under the surface, and I don't think anyone knows yet if this is just like a garden variety 10% correction in the market, or if this is going to end up turning into something much more meaningful. So yeah, as always, risk management is really key. Dow Jones, or this is the Russell, also put in a nice green candle, closed up, just about 2% today. Nice move for the Russell. And the Dow Jones, such a dog. The Dow Jones, also same thing, huge hammer candle here. All right, well, let's take a look. There's a couple of things that I want to touch on here. So let's touch on just the level of put buying that's going on in the market. So let's go over to this intraday put to call ratio. So I'm pulling this up on my screen over here. Let's check it out. So yeah, we had extremely elevated levels of put buying the entire day. So what we could have seen intraday was really just like a short covering rally where we were like 3 standard deviations oversold in the market. And maybe it was just, hey, some short started to cover, what have you. But yeah, there's just so much put activity that's going up. We had a bunch on Friday and now a bunch today on Monday as well. Other dynamic that I just want to briefly touch on. This is kind of unsettling, not gonna lie. Our squeeze metrics DIX, the dark index. Look at what this thing did. It's at a 37.2% reading. So it really just shows these dark pool buyers, they were not active whatsoever in the market today. And I think that's evidenced by like the first half of the day where the market was down, close to 4%. So it looks like everyone was just puking. And then, yeah, some short covering or, someone bought the dip. I think that remains to be seen. But I think this low DIX print, this tells me, hey, just because we had a nice candle today, that does not really mean much in the context of this downtrend. We are not out of the woods yet. And then also, last thing here, take a look at the VIX term structure. The VIX term structure is still inverted. So I think there's going to be a lot of opportunities really on both sides of the market. To the long and short side. And this market is just a coiled spring. So I'm going to be honest, like tomorrow, could it be like a 3% up day? Absolutely. Could it be a 3% down day? Also going to say absolutely. It's really just, we're in a market that's really trading like it's in a crisis and like it's in a deep correction or a bear market. So you never really know what to expect, but our trend model is still negative. Let's take a look here at this options activity. And before we do that, IBM did report earnings after the bell. And check this out. IBM put in a nice green hammer candle today. It looks like it's responding pretty well to the earnings print. Oh shoot, no it's not. Jeez. So yeah, this is another thing that looks a little sus. So the IBM, in maybe like the 30 minutes after reporting, was up like, a good like 5 to 10%. And here we are, we just gave all of that back. So gave it back. This is pretty light volume right here, but still pretty crazy that, yeah, just lost all those gains. So we'll put this in the column of things that are a little bit unsettling. Tomorrow, we're going to have a big day. There's a couple dynamics going on, so let's talk about them. All right, so we have Microsoft reporting earnings tomorrow. And Microsoft reports after the bell. It's one of these big mega cap tech stocks. I have been noticing there's been a lot of good headlines out about Microsoft, like partnerships that they're doing, etc. Microsoft found support right at that 200-day moving average. Took out this VPOC first, though. Check that out. Wow, it's crazy. But yeah, depending on if Microsoft whiffs the earnings report like Netflix did, this crash likely continues. If Microsoft has a great earnings report, maybe that's a bit of like a volatility dampener. Netflix ended up closing down 2.6%. And then after Microsoft earnings, the other dynamic that we have coming up is Fed Wednesday. So Fed Wednesday, I think at this point a hawkish Fed is pretty much priced into the market. But we'll have to see. I mean, that's another really like decision point, another catalyst in the market. When we have these dynamics where the volatility is just so elevated, you know, every catalyst matters, and every catalyst can be a complete turning point in the market. Let's look at this VIX. The VIX got all the way up to 38.93 up here, and it came off significantly. When we have these big vol events, it's always a good thing when we see a huge, what looks like a topping candle in the VIX. It really just shows here we were at peak fear. We had every reason to just keep slipping. You know, longs were really on their back foot. The fact that this retreated so much from the highs, I think that is a good thing. But make no mistake about it, this VIX is still trading pretty close to 30, and the VIX futures curve is still inverted. So I think what could end up happening is if we get Microsoft earnings come out pretty good, and then the Fed just comes out, you know, as hawkish as they have been, or even like a slight dovish tilt. You know, like even if they say, hey, we're going to make sure, you know, if the market starts buckling, we'll back off. Like if they were to say something like that, could we end up having just a monster rally into the end of the week? Absolutely. But we could also have the exact opposite occur. We could end up with a 20% correction in the market. So I think it's really just a situation where if you're tactical and you're nimble, you know, you can do a little bit of active trading in the market, but in terms of just like big position trading, it's a little bit tough out there. Let's put it that way. All right, let's talk about some of my trades for today. Let's pull this up. So I had a good sequence today. So I got long these January 28th 430 SPY calls for $8.59. Took these pretty close to the open, playing for an oversold bounce post-Fed Wednesday. So these are short-term calls, right? And for the first half of the day, these were just so deep underwater. I think these got all the way down to like $4. And now they're at like $13.59. So this, so far so good. We'll have to see what happens. But this is really just like a tactical oversold bounce trade. I also doubled up my position in GLBE, the March 18th 35 calls. GLBE, I just noticed Shopify was super strong today off the bottom. Shopify had some nice headlines come out as well. But this GLBE, I've been looking at Shopify and GLBE. They're both basically shot for dead. These things, like, I'm talking to a lot of people and I tell them, hey, a lot of these growth stocks, they're so much cheaper now and they're much better deals. Everyone's looking at me like I have 5 heads. But when Global E was at $85, it was like, oh, this is the best stock ever. Like, nothing could go wrong with it. So my conviction that's developing is, hey, like, unless this market just has like a complete like liquidity event and like, oh my gosh, we all find out later that the market got cut by 50% in 2022, like barring anything like that, I really think these growth stocks are becoming way more attractive from these levels. See, I added to that position and this ended up flipping green intraday, which was good. Then I also added a position in GLD. So GLD, I think, to be honest, as a technical trader, this is the most compelling opportunity in the market right now, this incredibly weak market. GLDE putting in a nice series of candles here in a very weak market, moving to the upside on very high volume on both of these green candles, and the weekly pattern is just very strong. It's a really good pattern, nice volatility contraction here and it's really been consolidating for about a year. So I added some calls on GLD for March. So yeah, I definitely got a little bit more aggressive today, and so far it's paying off. Well, we'll have to see. You know, anything is possible for the next couple days. After seeing this at a Squeeze Metrics Dark Index, I'm like, whoa, might want to piece out of some of that tomorrow. But yeah, we'll have to see. We just have to take it day by day. And then finally, let's take a look at our options race. Let's look at today's combined flows. Let's see what we got. Alrighty, we have Tesla. Wow, SPY actually had more flow than Tesla? What? I haven't seen that in forever. Jeez. Oh my gosh, 6 billion in SPY flow. What the heck? Jeez, let's take a look at this. Let me take off some of these filters. Wow, this is incredible. Always something fascinating happening in the market. This is the best job ever. Let's see here. So SPX, a lot of puts going up in relation to calls. Although there were some calls that went up. SPXW, just a ton of put buying. Tesla, mixture but mostly puts. Nvidia, mixed bag. I'm assuming a lot of these calls were bought, you know, when these things were trading down in the dumps. VXX, more calls than puts, but the VXX is very active. AMD, mostly puts. Now let's take a look at these put to call ratios. Yeah, the SPX put to call ratio is 1.83. So yeah, I mean, we just have to make it past this Fed Wednesday. And I mean, assuming we get, you know, I don't want to say good news, but, you know, just not bad news. I think the kindling is there for a bit of like a bear market bounce. So yeah, we'll just have to take it day by day. And then IWM put to call ratio also very high. So yeah, we're just gonna have to take it day by day. That being said, that about does it for this market recap video. Hope you all enjoyed your session today, and I'll see you all tomorrow.